Hello and welcome back to the NWR Virtual Investor Conference. I'm Andrew Gagan from AusBiz. Thanks for joining us. Next up, we have Atomos, ticker code AMS. It is a global video technology company delivering award-winning, simple to use, monitor recording content creation products. And these products give content creators across the rapidly growing social, pro video and entertainment markets a faster, higher quality and more affordable production system. Atomos' range of products take images directly from the sensor of all major camera manufacturers, then enhance, record, and distribute them in high-quality formats for content creation using the major video editing software programs. The company delivered record sales of $32.8 million in the first half of 21, despite being impacted by COVID, driven by its compatibility with Apple's ProRes RAW technology as the global industry standard for video recording formats. Now, just a reminder, anyone in the audience to submit a question for the Q&A session at the end of the presentation, type it in the Q&A panel on your screen now. Well, let's now join the Executive Chairman, Chris Tate, and CFO, James Cody. James and Chris.
Thanks, Andrew, and good morning, everyone. It's great to be with you today. Let's just come on to the next slide, James, and let's get into the year that was. We've come out, obviously we haven't come out with our full audited results yet, but we've reconfirmed our guidance here with a record result of 77 million of sales, which is a 73% increase on the prior period. Importantly, we became profitable as well, significantly profitable in the period, with an EBITDA percentage of around about 9% of revenue. That's by far the most profitable we've ever been. Importantly, we should understand on that 9%, that is after accruing for a significant bonus based on sort of a COVID recovery, which we put in place for the whole of Atomos, right, for the whole team, which really will improve that percentage EBITDA by 2 to 3% once it's added back. So that's sort of a COVID recovery incentive scheme effectively that was put in place, and the team absolutely performed to the peak and maximised the outcome for them, but importantly maximised the outcome really for shareholders as well. So you can add sort of 2 to 3% more on top of that 9% EBITDA level in terms of really sort of the performance for the year. And then equally importantly, the performance started off with sort of our costs being much lower at the start of the year, but as sales increased as we went through the year, we started to put more resource back into the company to really address the sort of the global video phenomena that, an opportunity that we had, so much opportunity. And at the start of the year, we weren't able to sort of get the product launches out that we needed because we had cut costs. But as we brought engineers back and invested in further engineering, we were really able to accelerate that and finish the year with a number of new product releases, about 4 or 5 new product releases. Importantly, our first paid-for software releases as well as hardware releases. And we had put in that structure that really allowed us to scale up as we finished the year, but importantly, is going to continue to allow us to scale up into the years ahead. So I might just hand across now to James, who will take us through the year that was in a little bit more detail. James.
Thanks, Chris. So yes, the year that was FY21. So what were the sort of key features of that for us in terms of firstly the macro factors, and obviously COVID was the major impactor from that perspective. And it really what that did was it forced us to have a sort of whole of business review. We looked at our org structure, our cost base, our processes, and how we could improve all of those things to make the business more efficient, which I'm happy to say we feel was extremely successful. Atomos is now a far leaner, stronger, and more efficient business than it was sort of 12 or 18 months ago. Now, with COVID, actually came some opportunity as well. We've all seen the growth in video. Here we are now on Zoom. Teams and Zoom have both become everyday tools that the whole of the world is now using, and we think that a lot of that's going to be here to stay. So clearly in the video business, that presents an opportunity for Atomos. Other impacts, so global impacts, Forex, people often ask how that impacts us. Well, we're happy to sort of say that we've got a natural US dollar hedge, so not too much of an issue there. A bigger issue would be the well sort of publicised component supply challenges that the world is experiencing, and we've taken quite a lot of action to ensure that we manage that as carefully and as well as we possibly can. So we've invested in new resource both in China and in Melbourne to manage the supply chain as best we can. We've invested in buffer inventory. We've entered into sort of longer term forecasting and therefore expanded our order window with suppliers, and contractually where we can, we'll lock in supply that way as well. So we feel like we're doing everything we can to manage that challenge as best we can. Internally, we've been focused on improving the business to ensure that we're able to scale. That's started with a long, hard look at the cost base. We're now beginning to carefully reinvest in areas where it makes sense and areas where we need to ensure that we're able to scale. And we've been doing this whilst kind of being careful to preserve the entrepreneurial essence of the company that frankly is what got us here in the first place. So we're very mindful of that. Don't want to become too corporate, but we do need to put in place some of those processes to ensure we can scale. We've done things like investing in a new website, new ERP system, and developing our processes. And the business now is much better able to sort of prioritise projects and leverage the resources that we have to exploit the new opportunities that we see in front of us. And those opportunities are extensive. We have no lack of opportunity in this business. It's just making sure that we're disciplined and we go after the ones that make the most sense. So what's been driving the strong rebound and growth in the business? Well, really there's sort of two key things. Firstly, the rapid adoption of the ProRes RAW video format, which we saw back from the start, back in 2018, has been great for us. And just to recap, that's Apple's ProRes RAW video format, which was launched in April 2018. And our long-standing relationship with Apple meant that we're the only company currently licensed to record natively in ProRes RAW. There are now 10 major camera partners who've introduced RAW-enabled cameras, and as you can see on the chart, our monthly activations of ProRes RAW, that's people that log onto our website and say, I'd like to turn on ProRes RAW in my device. Those have increased sevenfold over the last 18 months. The number of cameras themselves capable to output in RAW has increased by 200% in that 18 months, with 47 cameras expected to be supported by the end of 2022. So it's a real expansion of that ecosystem and really driving a new standard through the industry that we're right at the center of. But it hasn't all been about ProRes RAW. We've also launched a number of new products sort of in the second 6 months of the year. Those include Ninja V Plus, which is the world's first 8K and high frame rate monitor recorder, Ninja Stream, which provides multiple on-set streaming options for video producers, the Ninja 5, which has been around for a couple of years and is absolutely our #1 selling product. As Chris alluded to previously, we've enabled the popular streaming format H.265, which is done via a $99 software upgrade. That's our second paid for software offering, an important new area which we intend to grow into the future. We also added the 7-inch Shinobi to our monitor-only lineup, and we launched most recently Atomos Cast, which is a sort of companion product for Ninja, which for $399 turns a Ninja into a standalone multi-camera production device. So managed to get quite a few new products out, as well as having all of that internal focus that we've touched on. Over to you, Chris.
Thanks, James. So that was the year that was, but where are we going? Well, before we discuss where we're going, let's just revisit where we came from. So 10 years ago, Atomos was formed by some of the world's great video technologists. They had a vision to connect the world of the camera maker with the world of the editor. So, you know, think of Japanese cameras and think of the Silicon Valley companies that do the editing. And the core to our Atomos know-how is the video processing, the algorithms that we use to capture the video, to manipulate it, enhance it, and store it. And Atomos sits at the middle of that whole ecosystem. So the Japanese capture, another camera company capture, through to the editing. So what effectively Atomos did by inventing a monitor recorder and aggregating the monitor with the recorder and then bringing other functionality to it and putting more and more technology into it, was they invented effectively the video processing computer. And over time, our intention is to put more and more functionality into the video processing computer. To have one device, much like this device was once a phone, to have one device that can do more and more with video and do more and more of what is required around color grading, editing at the point of capture, which is where the content creator really, really wants to be able to do those things. So that's where we sort of came from. And to do all of that, we had to build a real bank of technology. So to make effectively a video processing computer, we had to design our own chips, and we continue to have the Atom IC 2 and 3 and our family of chips that contain all those algorithms and software on them. Very, very difficult thing to do. We've built our own operating system. So much like, you know, you get the iOS or other operating systems, we have the Atom OS, which enables us to do the things on the video processing computer and add other technologies and standards. We have our own hardware design. We have some of the world's best designers in Japan who have worked with companies such as Sony and Panasonic, and they design our hardware products. We license from some of the world's best technology companies like Apple and Red, and we have those relationships. We have our own screen technology, and we have much more, which we will be talking to you in September at our strategy day about as well. We don't want to spoil the party by telling you too early, but we'll tell you a little bit more at that strategy day in September. So James, let's come on to the next slide. I think we've dropped jump on there actually. So we've got the building supporting, yeah, there we go. So we've talked already about the technology that we have and the bank of technology, but the other key pillar to the Atomos strategy is the fact that we sit in the middle of the video ecosystem. And to do that, we have to collaborate with some of the best companies in the world. We've already talked about those camera companies. And you can see through our ProRes RAW implementation how we link in, and it's very difficult to link in and have those relationships with all the best camera companies in the world, with the likes of Apple, with the likes of Adobe. And we have those relationships at the highest level. That is a key aspect to Atomos' strategic advantage. We believe we're a great tech company. We have great video expertise, but we understand that there are other amazing video technology companies in the world. And they're some of the biggest and most successful companies in the world. And that to create great products, we have to work with them and create an ecosystem that will allow us and allow the content creator to ultimately create ever more quality video at an affordable price. So we understand that we can't do all of that on our own and that we have to work with all those companies. We're effectively building this ecosystem, but importantly, Atomos is right at the center of that ecosystem. And in many ways, that's been our challenge. By being at the center of the ecosystem, we have so much opportunity. We have so much when partners come to us and they say, we want to work with you on this new product. We want to develop this new software. We want to develop this new workflow. And what we have worked very hard on in the last sort of 18 months is prioritization. We can't do it all, not at this stage. We have to pick our winners. And I think you can see from the year that we've just had, we've been picking our winners, and we're going to pick more winners going forwards. So James, let's come on. let's just bring to life a little bit of what picking a winner is actually about. So here you can see Matty, who is an influencer on YouTube. He has 1.1 million subscribers. He's a Finnish YouTuber, and he has demoed to all of his 1.1 million subscribers how to use an Atomos device to create better quality content. James, I think we just jumping on here. Just can you go back, just back to Matty? So Matty is an example of a user in the social space. So he's producing, so he has got all those users, he's talking to them and he's explaining how to use the Shinobi and the Ninja. Let's come on to the next one. Now this is Luca Norrie. He's an independent filmmaker. He uses a Sony camera, but to get ProRes RAW, how's he going to do it? He needs an Atomos device stuck on the top. So there you've got Luca, an indie filmmaker using Atomos products. Or we've got Leonor Teles, who was able to bring his film to life by using Atomos equipment. He was a young guy and created an independent film, which actually won a Golden Bear Award at the Berlin Film Festival. How did he do that affordably and to create quality at the highest content? He used an Atomos device once again to help him do that. But we're used by influencers, we're used by indie filmmakers, and then we're used by some of the most famous filmmakers in the world. Obviously, you've got the Bond film there, you've got Star Wars, and Atomos devices are used on all of those productions. So what does that mean we're going to do going forwards? Well, we're obviously going to continue to focus on our core heritage, which is bringing hardware products to the market. Those products that are used in the social world, that are used in indie filmmaking, which is our heritage, our pro video heritage, or at the highest end in producing those high quality films. So we're going to do more and more of that, leverage our core business. And obviously we've got great tailwinds with the ProRes RAW being really adapted as an industry standard. But we're going to continue to acquire more and more technology and invent more and more technology so that we can do more of that going forwards. So 6 to 18 months out, we'll be launching our Series 2 product range. Think of our entire product range updated for a new chip. What does that chip enable us to do? It enables us to bring apps to effectively the video processing computer. So think of the apps that are relevant for people making high quality video. What might that be? Color grading, certain editing capability, certain codecs that are relevant to them and not relevant to others. And the ability to download those like apps onto the video processing computer is something we'll be able to bring to the entire Series 2 range. But we are so good at video processing, we have focused in the pro video world, and video is going everywhere. We've already talked previously about gaming, and we want to move into new verticals. Now, gaming's an example, but think of corporate, think of this experience. Once again, it's about us making sure we don't bite off more than we can chew. We have to do this in a structured and orderly way. We've got enough in our heartland to get on with hardware and moving into those software apps, but we can move into new categories such as gaming. And effectively, the gaming market is a consumer market. And you can start to see our products increasingly being used and coming towards consumers through other channels. For example, we were in the Qantas frequent flyer brochure a month or two ago, and you'll see us moving increasingly into that area. But we do have this core IP, and we are able to also monetize that by working with other partners. So just as we license from people like Apple and Red and so on, key technology, our core technology, we can license with others. And we have just recently signed up a transaction where we will be producing our chip under license, or a version of our chip, for an audio company. That's the next 6 to 18 months. Now, to build that technology bank and really think of us as having this technology bank and partnerships, We obviously may look at certain M&A, which can help to build that technology, or when we're moving into new markets, such as gaming and corporate and so on, we may look at buying companies that help us get into those new markets. So that's the M&A that we'll look at, but we'll also do that organically. Then beyond that, 18 months out, it's going to be more of the same. Think of Atomos as a company that isn't just going to be building the video, having the technology and the partnerships that allow us to do what we've always done, which is video content creation. But think of the enormous amount of storage that's required for video, storage in the cloud, automation of an AI around actual video production. All of these things, Atomos has the core technology and the partnerships to enable us to move into those areas. So that's where we'll be going in the next 18 months. Now, too much to go into right now, but I can tell you, of course, we've been building the team that's going to allow us to do that. Importantly, I want to say we're going to make sure the core is secure, but we're building the team that's going to take us into the new direction. And we've brought on people like Estelle Magecki, ex-Apple, who has a strong background with Logitech and software, Mark Harland, who really manages the core for us, who's our Chief Operating Officer, and there's going to be an opportunity to meet them. And of course, James, myself, Trevor, and Jeremy, our founder, at the Strategy Day in September, and I encourage everyone to come along and meet with us then, and we'll tell everyone a lot more about that. Andrew, I ran over a little bit, apologies for that, but back to you.
Chris, James, thanks very much for that presentation. All right, a couple of questions coming your way. Regarding the $300 to $500 a day rental for Ninja Stream, what would be the retail sale price if the company had chosen to sell instead of lease? And is there any plan to bundle the product with local telco provider data plans, since it's similar to a phone using telco data?
Yeah, so if we were to sell that product, it would be a sort of a $10,000 to $15,000 price point. And we understand that the use case for it, therefore, is one really where it's sort of kind of high-end, indie filmmakers and production houses that really want to access that product. And that's why the rental house kind of channel was considered the right way to bring that to market. We may in time take that technology and make it something that's much more accessible to a broader market, but to start with, we just want to dip our toe in a little bit and just go through the rental channel. So so that's the first point. What's the second part of your question there, Andrew? Sorry.
Is there any plan to bundle the product with local telco?
Not at this
data plans. Yep.
Yeah, not at this stage. And very much on the radar, but coming back to the making sure we sort of focus on the right things at the right time. There's a lot involved with signing up one of those plans. So, that could be something that's 12 months out, I would say. It's not an immediate thing.
Has the chip shortage impacted your business at all?
Not core products, no. We our core chip, we have a strong supply of. There are some products that use different chips, and we certainly have had some interruption to supply, but we generally are able to solve it. So the year that we've just had, could it have been better if we didn't have some of that interruption to supply? Potentially, yes.
Now, obviously, your target there is professional content creators. You mentioned potential growth, particularly as far as corporate video, gaming. What about the amateur filmmaker? What sort of opportunity is there?
Well, that's really been our core, the amateur filmmaker. And I think, we talk of these three categories of social, pro video, and entertainment. But our heritage is pro video. Pro video was the amateur filmmaker, it's the wedding videographer, and that's where video started, sort of, our market started 10 years ago. So the high end used very extensive equipment, broadcast, and sort of the filmmaking industry used expensive equipment. But what we've been able to do is start to move into the high end, into entertainment, because our products really true up, effectively we disrupt what has been the traditional providers. So where you needed to spend $100,000, you can now spend 5 or 10. So that heartland of pro video is absolutely is a heartland. It's very strong. But equally, social, of course, YouTubers and so on, they're becoming more and more adept at wanting to create high quality content. So the lines get blurred between the different categories. Your high-end social filmmaker or video producer is actually kind of really the same almost as an indie filmmaker these days.
Now, I can imagine technology is changing incredibly rapidly at this point. What are you devoting to research and development?
Yeah, so our whole business is effectively kind of very focused on R&D. It's sort of embedded in our culture. So around about 2/3 of our people would be working in the engineering side of the business, whether it's hardware, software, and so on. And we are continually bringing new technologies to fruition that kind of always very focused on the products that we want to bring to market. So we have a very, very focused approach to our R&D. It's more D than R, and it's very focused. And the key part of all of that, I think, what enables us to do that is our partnership approach. So it's really important to understand with Atomos these two pillars really to our business, which makes us unique and gives us this competitive edge. We have the technology of our own and unique and technology of the chip, the operating system, etc., which we've already talked about. But it's also this partnership approach. So we are able to sit down with Apple and say, hey, let's invent this new product. And they say, well, we've got all these resources, all this capability. We do the same with Sony, we do the same with Panasonic, and we do these joint initiatives. And effectively, when you look at something like a ProRes RAW initiative, that's an example of that kind of initiative. So we sit in the middle of that ecosystem, and then we can focus our resources accordingly.
Okay, this question from Jeffrey. When Atomos IPO'd, it said it will aim to achieve gross margin of at least 50% on products in its prospectus, but this was derailed by issues such as the initial production of Ninja and then COVID, of course. Will Atomos's gross margins for its monitor and recorder products trend towards 50% plus, or are they expected to remain around the current levels moving forward?
Yeah, there's always a lot of factors going into those sort of margin calculations. So, I think when there is at a new product launch, they're typically in excess of 50%. Then over the life cycle, margins tend to get eroded. So when a product comes to the end of its life cycle, of course, it gets discounted and those margins tend to reduce. But in aggregation, that's certainly an aspiration for us, is that 50%. Things like software products will start to make that even stronger. So the release of the H.265 download, for example, was that's 100% margin. It's a product that is downloaded off of our website, and there's no kind of cost of goods associated with it. So that helps our overall margin.
Okay, and this one from Michael. Given the host of opportunities mentioned, are there any plans for further capital raising in order to accelerate these growth options?
No plans for any capital raising. We've got plenty of cash. So I think we've talked about sort of circa 26, 27 million of cash on the balance sheet at the year end. I think that's right, James, isn't it? So we've got plenty of cash, and we'll look to use that smartly with acquisitions. We've got a unique opportunity on the M&A side of things because of all these partners we talk to. Well, on the one level, we talk to the world's biggest technology companies, but there are little video tech companies out there around the world doing amazing things. And we have all these customers. We have hundreds and thousands of subscribers. We have this unique opportunity to help them commercialize. So we'll be able to do smart transactions where we can, pay those founders some cash, some equity, perhaps, some earn out, perhaps, but more importantly, It can all be based on performance, really. So we can structure things smartly along those lines.
Chris, James, thanks for the presentation and thanks for joining us from Atomos.
Thanks, Andrew. Thanks, everybody.